Good evening, traders. Welcome back to BCI's Evening Market Outlook. Spot gold surged above $5,400 at the start of the week, reaching $5,419.32, the highest level since late January, as geopolitical tensions in the Middle East triggered a sharp safe haven move. The VIX index jumped, Brent crude approached a 6-month high, and concerns over the closure of the Strait of Hormuz intensified risk sentiment. Structural demand remains strong, with central banks, particularly in China, India, and Turkey, continuing to accumulate gold at a historic pace. U.S. core PPI rose 0.8% in January, reinforcing inflation concerns and delaying Fed rate cut expectations to July. However, gold is currently driven less by rate timing and more by systematic risks. Falling U.S. 10-year bond yields and compressed real rates continues to support prices. WTI. The reported closure of the Strait of Hormuz marks a major escalation for global energy markets. OPEC increased output by 206,000 barrels per day, but that is insignificant compared with the 18 to 20 million barrels per day that transits the strait. Freight rates, insurance costs, and shipping disruptions are now central to price volatility. Even with spare capacity from Gulf producers, supply cannot reach markets if transport routes remain blocked. Claims of a supply glut are misleading, as surplus barrels are concentrated in sanctioned crude, while demand for mainstream grades remains tight. USD. The dollar rose about 0.8%, a relatively moderate reaction. Markets are assessing how long tensions will last and the potential inflation impact if oil approaches $100. Focus now shifts to the upcoming Federal Reserve meeting, where policymakers must weigh inflation risk against financial stability. Earlier expectations for mid-year rate cuts have now become more uncertain as geopolitical risks rise. That's all for today, and I'll see you in the next update.